Hey guys, what's up? In this video, I will be going into my best 3 stocks for the month of March 2021. I've done tons of research into companies over the past few weeks, and I've looked into hundreds of stocks. These stocks are the ones that I believe are the best ones to buy now and have huge growth potential. I'm doing something a bit different in this one. I'm going to be providing a little something for every type of investor in this video. I'm picking 1 penny stock, 1 growth stock, and 1 dividend stock. You guys are definitely not going to want to miss this one. Make sure to watch until the end as I give my full analysis on each of these company stocks. I will be covering key metrics, company news, and growth outlook for each of my stock picks. I put tons of work into constructing this video to give you guys the best possible value, so I would highly appreciate if you guys can give this video a quick and easy early thumbs up. And without further ado, let's jump into the video. I'm going to start off with what everyone wants to see. This is one of the juiciest penny stocks that has sold off recently, and it is one of my favorite cheap stocks that can absolutely explode in 2021. This first company is IDEX. Ticker symbol IDEX or IDEX. IDEX is a global company focused on facilitating the adoption of commercial electrical vehicles and developing next-generation financial services and fintech product. The firm operates through the Mobile Energy Global, also known as MEG, and IDEX Capital business units. IDEX's electrical vehicle division, which is MEG, provides group purchasing discounts on commercial electrical vehicles, EV batteries, and electricity, as well as financing and charging solutions. As of now, IDEX trades for $3.19 per share. This is a small cap stock. They only have a market cap of less than $1.2 billion. So far, the company is not profitable. They have a profit margin of 0%, along with a return on equity of negative 152.42%. They have almost $28 million of cash with a pretty solid ratio of 1.20. IDEX owns several electrical vehicle businesses. They own Soltrack. This is the first company in North America to have fully battery-powered electric tractors. They also own Tree Electric. This provides electric bikes, mopeds, and they're set out to eventually provide cars, buses, and other means of transportation. They also just recently added Medici Motor Works. This plans to sell their trucks and buses in North America this year in 2021. As we can see, this company is big on electrical vehicles and they own several businesses, but one of their businesses that really interests me is Wave. This is their wireless electrical vehicle charging. It's pretty self-explanatory. You drive over it with your EV and it charges it without ever having to plug in. This makes it way more convenient, especially when you consider that we are transitioning to more EVs. They're building an entire system of electrical vehicles where each side of their business can complement one another. They have their electrical cars, they have electric charging services, and they also have their own financing for EVs and their products. If you look at Medici Motor Works, they will be selling large buses and big trucks. Wave will be specifically meant for big trucks and buses. They can sell their vehicles and create the demand for the wireless charging with their Wave business. With Tree Electric, they offer battery services as well. Just like NIO does their own battery swaps in China, IDEX is focused on the entire EV spectrum, not only with vehicle and battery sales, but also with charging and energy services. Like I said, this company is creating an entire system, especially with their vehicle and battery services. This will create huge demand for the company's charging and energy services category. They can provide an entire product, services, and financing package. This way, all sides of their business can benefit and they can give you a full experience which can lock you in as a customer. Even though this company has had some issues in the past, it is definitely tough to pass up on something like this. This is one of these companies that I can see having huge growth within the near future, which is why IDEX is a company that you should consider taking a further look into. For number 2 on my list, we have Apple, ticker symbol AAPL. This is the largest technology company in the entire world based off of market capitalization. Everybody has heard of Apple. They make the iPhone, the iPad, the MacBook, and tons of other products, software, and technology services. I've talked about Apple in the past, and I believe this is a great buying opportunity, especially with the recent sell-off that we've seen. As of today, Apple is trading trading at $121.26 per share. Apple was sitting at a one-year low of $53.15 and reached a 52-week high of $145.09. This company has seen big growth over the past few years and has recently seen a bit of a sell-off. And when I say that this company is huge, I am not kidding. They have a market cap of $2.03 trillion with a T. Apple has a price to earnings ratio of 32.89 as well as pay a dividend of 0.68. Apple has done extremely well in terms of their profitability. They have a profit margin of 21.74% with an amazing return on equity of over 82%. Looking at Apple's balance sheet, these guys have over $76 billion in cash with a current ratio of 1.16. This is why this company consistently continues to grow. With as much cash as they have on hand, they're always ready to take advantage of opportunities when they see them. Analysts currently have Apple rated as a buy, as well as having a price target of $151.75, which is about 20% higher than what the stock is currently trading for. Like I've stated, we've witnessed Apple have a recent sell-off. Investing for the short term is more dangerous than having a long-term outlook on the company, but I think that right now is a great time to buy this dip, and if we know how Apple stock works, this has been a successful strategy in the past. Apple is also set to increase its dividend yield, and analysts predict they will sell well over 200 million iPhones in 2021. Over 35% of iPhone users are in need of an upgrade, including myself, because I'm still on the iPhone 10 or XR. I'm not sure what the actual name is, but I've held off on upgrading because the recent iPhones haven't really impressed me, and I don't like the new iPhone 12 because we don't fuck with 12. I just had to throw that in there. It was too good to pass up. But this year, a record number of iPhone users should be upgrading due to Apple's new 5G technology. Analysts expect that Apple should be able to grow their earnings per share by over 35% to $4.42 per share. I know that the stock market might seem a little bit risky right now, but this isn't one of those huge FOMO companies that we've seen. This is a prestige company with great fundamentals that will provide great returns throughout the next decade. Personally, I'm going to add more Apple stock to my portfolio and will continue to dollar cost average into the company over the next few years. And finally, for the third and last stock pick on my list, we have Simon Property Group, ticker symbol SPG. This is a REIT or real estate investment trust. Simon owns, develops, and manages retail real estate properties, which primarily consists of regional malls, premium outlets, and mills. As of today, SPG trades for $112.92 per share. This stock has seen a 52-week low of $42.25 and reached a 52-week high of $130.30. This company was trading at around $150 per share last year and was hit hard in the March market crash. Since then, the stock has begun to recover and has been on a tear since the beginning of this year. Simon Property Group has a market cap of $37.09 billion with a price to earnings ratio of 31.45, and SPG pays an awesome dividend yield of 4.61%. The company has been doing pretty well in terms of their profitability, having a 24.17% profit margin along with a return on equity of 37.63%. Taking a look at Simon's balance sheet, the company has $1.01 billion in cash with a ratio of 0.44, which means that as of now, they have more liabilities opposed to current assets they own. Analysts currently have SPG rated as a buy, as well as having a price target of $110.29, which is around what the stock is currently trading for. We can all agree that 2020 wasn't a great year for SPG shareholders, shareholders because lockdowns kept shoppers at home and really put a hurt on retailers and restaurants that pay rent to Simon Property Group. But with that said, lockdowns are beginning to ease and many more places are starting to open up across North America. It's looking a bit more stable as we ease out of social distancing restrictions. More people have started returning to retail stores and shopping malls as a way to get out of the house and enjoy themselves a bit. The worst is now over for Simon Property Group, and they're looking like they'll have big momentum going into the year since the stock has had an impressive 40% gain to start 2021. This has been one of my favorite stocks over the past few months. It's still undervalued, and if you combine that with the awesome dividend yield that this company pays, it's almost a no-brainer to pick this one up. I am not a financial advisor. Just make sure to do your own research before investing into anything. You shouldn't buy these stocks just because they're on my list. Just use this video as more of a guideline for your own research. With that being said, let me know down below what stocks you guys are interested in picking up. I hope you guys enjoyed today's video. Make sure to drop a quick like and subscribe to the channel to see more future content like this. I hope you guys have an awesome day, and I will catch you in the next one. Peace.